Well, I'm glad to have you back. The Minister of Finance and Coordinating Minister of the Economy, Mr. Ayodeji, has said that the reforms introduced by President Bola Tinubu's administration have effectively dismantled the dollar black market and boosted the federal government's revenue to 6.9 trillion naira between January and April 2025. The figure represents a 40% increase compared to the 5.2 trillion naira recorded during the same period in 2024. Mr. Ayodeji made this known in Abuja during the second quarter 2025 Citizens and Stakeholders Engagement Session, Fiscal Performance and Reform Outlook. He attributed the surge in revenue to the administration's liberalization of the foreign exchange market, fiscal discipline, and deployment of technology to block leakages across ministries, departments, and agencies. According to him, these reforms have restored credibility to Nigeria's financial system, provided a more predictable environment for investors, and eliminated productive economic incentives. Well, let's make sense of this development. My guest is Dr. Ayodeji. He is the Managing Director, Chief Business Officer, Optimus by AfriInvest. Thank you so much. Again, it's good to have you live in the studio.
It's great to be here. Good afternoon.
Yes. I read through this yesterday and I said, this looks good on paper, looking at the figures. 6.9 trillion as against 5.2 trillion naira. First, let me understand what you think is really responsible for this positive.
So I think the first thing we need to note is that the comparison is based on last year, quarter on quarter. So it's a year-on-year data, which Q1 2024 compared to Q1 2025. So the first thing we will look at is that what was the exchange rate last year and what's the current exchange rate? Was less than. So you will see that that the depreciation of the naira forms a major part of it. So when you break that number down, you see, even for customs, the naira value they now get from the dollar that they charge is higher. So based on the numbers that maybe they added about 1.2 trillion, you look at also FIRS. Because of the value of products, goods and services have also factored in the exchange rate. So if a phone that should cost 1 million naira, and I'm going to apply VAT of 7.5%. That same phone can be 2 million naira, and I'm still applying that 7.5%. So you see that even from government revenue would have also doubled because the value of those products have also reflected the depreciation of the naira. So if you disaggregate it, if you look at the numbers in dollar terms, it will be lower. But since we spend in naira, so that depreciation is one of the major reasons for that. Yes, I agree. For technology plays a lot of a bigger role in terms of blocking leakages, and you are able to at least centralize the revenue. So you are able to also see it through a dashboard and see that revenue is coming in. So that has improved efficiency, and that is also very positive. But by and large, the major contributor to that decline, to the improvement rather that we are seeing in the revenue numbers, is as a result of the depreciation of the naira. Because on a quarter-on-quarter basis, when you compare last year Q1 2025 and this year, last year Q1 2024 rather, and this year Q1, you would, when you factor in exchange rates, that would also show in that number.
All right, let's take a break now, and when we come back, we'll continue this conversation. Don't go away. All right, they're glad to have you back now. We're discussing issues around revenue booster from the federal government angle, as said by the Minister of Finance, and I have Dr. Ayodeji in the studio. So you were trying to make us understand earlier, before we went on that break, that issues around the disparity between the foreign exchange spaces. What could be basically responsible for this?
Yeah, so if you look at the exchange rates around Q1 2024.
And what we have now?
Yes, so it's around between that 700 before the major depreciation of the naira. So that is also responsible because we are looking at the revenue in naira terms. If we look at it in dollar terms, it's actually lower. But because government also spend more in naira, so what they've done is also correct. But if you know, when you disaggregate a number, you want to know why the jump. So from, I was saying then that even from the FIRS angle, the value of product have also increased. So if I'm going to charge VAT, value added tax, on a product or services, because that value have increased, the same item, the same quantity, there's the tendency that I will get higher Naira revenue on that. But so, by and large, when you break down the numbers, why it is impressive that the number has improved on a year-on-year basis compared to Q1 2024. The dollar, the main reason for that is the depreciation of the Naira. Some other reasons that, like the minister have said, can be traceable to, yes, technology will help in terms of aggregation of the revenue, the collection, which will reduce leakages. That efficiency has improved. But by and large, it can be traced more. If I look at those numbers, can be traced more to the depreciation of the Naira.
Remit is talking about, he talked about transparency, openness in revenue collections, and that's what was all of the things you've spoken about. Now, what about being able to block the financial leakages? That's also something that the minister talked about. I don't know how that also comes to you. Yes,
you know, it's technology would have also, it also still boils down to technology to help with that. When you are able to, when you pay, so in terms of the collection mechanism, that has improved. When you look at ministry, so that would reduce leakages. In addition to that, if you recall, even before the this current era of the what I say unification of the exchange rate, there's what we call subsidy removal. It also plays another role, because there's what we call the FX subsidies, that you give subsidy at a cheaper rate. Now that has been unified, which reduces the arbitrage or speculation that we see around the FX. That has helped. Fuel subsidies, you know, that what we call under recovery, or that NMPC used to subsidize. So the revenue, the FX revenue also coming to the CBN or coming from NMPC has also improved. So these are positive moves. And I know what our viewers will now be asking is, how has it impacted me? True. So it's good that revenue has grown by 40%, but how have we benefited from it? Because when you check the budget numbers in terms of actual revenue, what we benefit more from as Nigerians is the capex part, which is the capital expenditure. And looking at the numbers, most times we spend less for capital expenditure. I've not seen the numbers as for this year, but when you look at it, we spend less on capital expenditure. That is what we ease in terms of the inefficiencies that we're seeing. You spoke with the earlier guest about how Dangote is trying to bring in CNG trucks. He's trying to work on the inefficiencies. You know, if it's 2 naira or 3 naira per liter, that the inefficiency of transporting those items to the consumer will cost, it may have the ability to reduce that amount, which would impact on the disposable income of Nigerians. So those are we need to spend more on capex. Yes, we may not have the revenue, but it is creating that enabling environment that we see private sector willing to come into the government space to provide infrastructure that will ease transportation, would ease a lot of the cost we spend. You know, we always talk about the cost of moving things from the north to the south is significant. How can we tackle that? If we take that alone, that would have positive impact on food inflation, and it would improve disposable income, and we have more to spend for other things. So there's a chain, and that has the impact that has to also be focused on.
Interesting stuff. What about your views around the economy generally? Like, this is a positive news. We've seen also other positive news coming maybe from the Apex Bank, and some Nigerians or some economists are saying, it seems like there seems to be a bit of stability, or should we say light is expected at the end of the tunnel. What do you think about the economic recovery from looking at the fallout of the reforms before now?
Yes, I think we can see the number one variable that you look at is the FX. So because of the stability, yes, if we don't look at the past on where we're coming from, but with the stability we have enjoyed in the last 6 months, is bringing confidence. Businesses can forecast. Businesses can plan, and that's what I mean. They can plan. Even the FPI, foreign portfolio investors, we're beginning to see them in trickles because of that confidence. There's been liquidity within the FX system that you are sure that if you bring in your FX, you don't have to queue and you can exit. And based on projection that it may just stay around this level, even if we don't see significant appreciation because of the confidence that we're building. So as we now progress, we're seeing the oil and gas sector attracting investment into that space. All those investment brings FX to the CBN because they will also come in through the CBN. So that is also positive. And by the time we begin to see from the fixed income being added back to the JP Morgan index, some of those things would boost confidence. So based on current numbers, to boost confidence, but how will it impact on small and medium scale businesses? See, that infrastructure gap has to be sorted out. People providing their power, all those inefficiencies add up to the cost of production that we have to pay for. So to feel the impact more, yes, where we are is a good step. Kudos to the government for where we are now. But they need to also now take it further to how does it impact on the small, medium scale businesses. When you look at cost of borrowing now, average is over 35%. What kind of business will you do that will give you a margin of 35%? That's just to cover your cost of funds alone. Before you think about the cost of providing power, cost of moving the item. So when your cost of production is close to about 50%, what kind of business will give you that margin? Except you are in a business where maybe in terms of the substitutes are less and it's almost a near monopoly that it's items that we call inelastic. People would deal with, still buy them no matter the price. But that is an area where government needs to improve on to ensure that how can they help bring down cost of production, which is taking care of the inefficiencies that we see. The cost of lending still high. I can see interest rate is already coming down as expected, but there's that lending rate, which you also trace when you look at the banks. CRR is still, that's the cash reserve ratio, is still very high at 50%. So it means that if as a bank, I collect 1 billion, 50% of that goes to the CBN at 0 return, right? So I need to factor in the rate at which I am not going to make on that 50%. On the balance of the 50%, there's still liquidity ratio that I also have to keep. So these are some of the things that I know that as the MPC, Monetary Policy Committee, or the CBN are seeing the stability within the FX rate, they need to take it to that next level of how will it impact on businesses. SMEs account for close to 80% of activities. So there's a need to focus to see how those SMEs want to survive and how they can provide support for them. And the more they provide support for them, the more they're able to create more employment, which will have direct impact on insecurity that we're seeing.
Looking at the markets today, I also see that it's been positive. It's been bullish for some time. What do you make of the performance of the market?
Okay, thanks. So if you dissect, you will see that most of the stocks that are benefiting from that upside are non-financial services. So we are seeing the FX stability is one of the main reasons. Secondly, FPIs, when you check the NSE data, when you look at the FPI contribution to total transaction, around 16%, is improved. I think in April it was almost 20%. So that is also impacting on what we are seeing currently. But by and large, if we look at last year, a lot of these companies, especially non-financial, FX was a major factor that they had to book significant FX losses. So, but this year, for most of those companies now will not have to do that. They are able to project more, and demand is also picking up significantly. So that is also now helping to boost their income. So what we are saying is investors are pricing in the expectation that revenue would be positive. So we're about to, by next month, we begin to see half-year results, which would also further consolidate direction of the market. But what I would say is that investors should also not get overly excited that you break your investment rules. So it's not, some stocks have gained 50% in last 1 week. What we see is the bandwagon effect, that it is then that some investors begin to wake up to chase. So yes. I will always say that you don't want to join a moving train. If you are unable to join it from the bus stop,
from the start,
from the station, yeah, this is not the time to jump in. It's always going to now be a 50-50. So that for those that are new to the market, some of them now regret that because you are trying to chase something that's already moved. So the best time is look for value. Avoid what we call value traps, because there are some stocks that may be trading very cheap now, but we call them value traps because they don't have strong fundamentals. If the market sentiment changes, you get trapped that you may not even be able to sell. So these are some of those. Talk to experts when you want to invest, and don't get carried away with the excitement. It's positive for us within the broker community, enjoying this sentiment, and we're seeing that stocks that have fundamentals, investors are beginning to look at them.
But there seems to be that level of that confidence in the market. What do you also
make
of
Yes,
that?
There's confidence in the market. One of the major factor that may further drive the bullish sentiment is interest rate beginning to wind down. You know, they have negative correlation. So as we see that downward trend in the interest rate, we'll see positive return in the market. And investors are positioning. Some of these stocks have been beaten down significantly given their experiences last year because of the FX. But now beginning to see a resuscitation of their businesses, the support, and most of them are driven by fundamentals. So, but investors should do their research well and ensure that they don't just buy because they see that prices are going up, so you don't get trapped.
At the end of the day.
Yes.
Lamos, thank you so much, and thanks for your understanding of all of the challenges we had today. I've been speaking to Mr. Ayodeji, who is the Managing Director, Chief Business Officer, Optimus by Afri Invest there, dissecting economic issues and, of course, issues around the market performance for today. Specifically, I see that the likes of Dangote Sugar, Kumo Oil, are on the gainers list today. LLX, Champion Breweries, and on the other side, Dar Communications, Prestige, IMG, and any particular one of this that you like to talk about? Dangote Sugar, Kumo Oil, that's in the agricultural space, right? Yes,
so we've seen that bullish sentiment within the agriculture. So you see Presco, Kumo Oil, even LLX that is upcoming is also now enjoying that positive sentiment. They are into oil palm, so there's been demand for their products. When people are paying front load, are paying ahead of even getting those products because it's easier because of the exchange rate rather than importing them. If you can get them within the country, reduces your cost.
Yeah,
so
of course.
That is really helping, and that some of these companies, they are unable to even meet up with demand. So I would say they've been printing money in the past few years. So that sentiment is actually helping in the best. You also look at the likes of even NACO to also be enjoying that better glass. A lot of those companies, and it's good. Investors are beginning to wake up to look at fundamentals, look at the businesses that they do. You see CWG, is it an area that you think that there's prospect for them? If you see value in those businesses, then that's how to, like Warren Buffett will say, that invest in a business that you understand. So once you invest in a business that you understand that has positive value, then you also enjoy the benefit, and it's really be very tough for you to get your hands burnt because you're investing in the business. You're not just carried away with the excitement that we're seeing.
Thank you so much again. I must thank you for your time on the show.
Always my pleasure.
All right, then. Well, that's our show today. Thank you so much for being a part of it. I'll see you tomorrow again, same time, where we'll talk more business. Enjoy the rest of your day.